نعم. بسم الله. السلام عليكم جميعا. مساء الخير and good afternoon. Thank you for joining us today for Ahli Bank Discussion Session covering our performance for the first half of 2026. This session, as usual, will follow the same format. Ahmed will take us through the presentation first on the detailed bank's financial performance, and then we'll open the session for questions and discussions later on. Ahmed.
Bismillah. Thank you, Said, and good afternoon, everyone. And thank you for joining us today. On behalf of Ahli Bank, I welcome you all to our MSX discussion session covering our performance for the first half of 2026. Today, I will walk you through 4 areas: the macroeconomic environment and overall of Ahli Bank, our financial track record across our business segment, and our H1 2026 financial performance detail. We'll be happy to take your question at the end. Before we start, I would like to draw your attention to the standard disclaimer and forward-looking statement included in this presentation, and request you to kindly take a note of the same. I will begin with the macroeconomic overview, and since our last presentation in February 2026, Oman economy has remained resilient. That said, the external environment has become more uncertain, driven by regional geographic tension, volatility in the energy market, and disruption on global trade and shipping routes. Against this backdrop, Oman economy continue on a path of a sustainable growth and diversification. GDP grew 2.4% in 2025, and IMF projecting 3.7% growth for 2026, broadly in line with the global forecast of 3.5%. The government continued to manage its finance prudently. The 2025 fiscal year closed with a deficit of around 461 million riyal, and the 2026 budget projects a deficit of approximately 530 million. Public debt, external and domestic combined, stand at around 15.4 billion, bringing the debt to GDP ratio down to 34.7% from 36.5% in 2023, comfortably within a safe limit. A strong vote of confidence has come from the rating agencies. Fitch upgraded Oman to BBB- in December 2025. S&P affirmed BBB- in April 2025, and Moody's upgrade to Baa3 in July 2025, all with stable outlook. All 3 agencies now placed Oman firmly in investment-grade territory, reflecting strong confidence in the economy credentials. And Oman is accelerating its energy transition, targeting 30% renewable electricity by 2030, creating real lending opportunity for the banking sector in line with Vision 2040. Moving to the next slide, I will highlight the operating environment for the banking sector in the first half of 2026. Condition in the first half of 2026 is very positive. Lending grows strongly up to 12.3% compared to the last year and up to 8.3% in just the first 6 months of this year. Sector banking asset reached to 52.7 billion riyals and loan reached to 38.3 billion, both growing around 11 to 12 annually. Customer deposit across the sector also grew strongly, up to 13% compared to June last year, including healthy growth in the Islamic banking deposit. On the interest rate, the average lending rate in Oman came down to about 5.3% from 5.5% a year ago. The Central Bank of Oman also cut its repo rate to 4.3 in line with the US Fed. The sector remained well capitalized at 17.4 and the asset quality is stable. The industry MPL ratio was 4.4 at a half year. As I will show you shortly, Ahli Bank is doing better than the industry in both fronts. Now let me turn to Ahli Bank itself, who we are, how we are led, and what we have delivered. On the strategic objective, our strategy is to build a clear objective and disciplined execution. Each priority supports the others, and together they position the bank for sustainable long-term growth. The bank, guided by an experienced board of directors and executive management team, with depth expertise across banking, risk, strategy, and transformation. Strong governance is a key priority on how we operate. The board is supported by dedicated committees and management by specialized committee, together ensuring sound decision-making and effective oversight. Our H1 2026 result shows scale, growth, and delivery of our objective. Let me highlight a few points. First, our scale. 19 years of commercial banking, serving over 300 retail customers and more than 12 corporate entities through 53 branches, including 3 digital branches and dedicated corporate branch. We hold 10.1 market share in loan and 9.4 in deposit, with a strong Islamic presence of 26 branches. Second, our growth. Since 2024, our total assets have grown at 13% CAGR to 4.5 billion riyal. Deposit at 17.2 to 3.5 billion. And net loan at 15.3 to 3.7 billion. All ahead of the market. Third, delivery against our objective. 24% fee income share, among the best in the market. 46% retail deposit, up by 25%, reducing reliance on expensive institutional funding. And our cost to income ratio is at 42%. maintained even as we invest in branches and digital. Externally, our credit profile is validated by Fitch at BB positive, and Capital Intelligence recently upgraded to BBB minus stable. And underpinning all of this, we are backed by a strong institutional shareholder base and a reputable long-standing investor, a solid foundation of our long-term direction. Moving to the next slide, our recent highlight partnership, new product, capital, and network. A quick look at what we have delivered in the recent past, reflecting innovation and commitment to sustainability. As a partner in excellence, we are funding a priority project aligned with Vision 2040, and we acted as a financial advisor for Oman flagship sustainable urban project. On product and service, we launch instant credit card printing, Ahli Next, the first child mobile app, a POS financing program, and upgrade our mobile banking application. On a capital, as you know, we have completed the right issue of 357 million shares last year, and in H1, we have completed our third issuance of mandatory convertible bonds of 16.2 million riyals, reinforcing the capital base that fund our growth. And on network, we have opened 4 new branches and expand our MFK across Oman. Moving to the next slide, on our digital transformation strategy. Our digital transformation strategy moved from enablement to intelligent transformation, what we call digital transformation 2.0. We are focusing on 4 areas: hyper-personalization of our loyalty and finance tool using AI, end-to-end digitalization, including digital lending and environment management, deploying AI across all the organization for efficiency and resilience, and finally, regulatory innovation such as eKYC and open banking. In the next slide, we are showing what we delivered in 2026. First, from a digital adoption and growth, our digital adoption rate has reached to 98%. Islamic transition has grown 29x since last December 2021, and we have added over 130 features to our mobile app. Second, from the operational excellency, we have delivered around 200 automation, saving hundreds of hours of manual work across our processes. Third, from a strategic milestone, we have been first to market with more than 15 digital services in our MFK, and also we launched 12 new digital channels. The result of all this, our customer satisfaction score reached to 90%, which is a clear proof that our digital investment is improving the customer experience. The next slide, I will highlight our digital roadmap for the remainder of 2026. built around 4 priorities: digital business expansion, AI and advanced analytics, platform modernization, and regulatory compliance. First, from a digital business expansion, we will launch a future product in digital lending and introduce our new Ahli Market app. Second, AI and advanced analytics. Significant investment in AI infrastructure, in use case deployment and talent. Third, from a customer centricity and platform modernization, investment in key initiatives to drive customer centricity with critical upgrade to our core application and infrastructure. Fourth, from a regulatory compliance, we are ensuring the bank remain compliant with our and evolving regulatory landscape as a new mandate are expected in 2026. Now we will move to our financial track record across all the 3 business segments. Wholesale banking, retail banking, and Ahli Islamic. I will start with wholesale banking, and our wholesale banking remain a core engine of the bank. The total asset grew from 2.9 billion in 2024 to 3.37 billion by June 2026, 10.2 CAGR, and operating income grew at nearly 14% CAGR to 39.7 million in H1 2026. The corporate banking and SME, we serve the client through a sector-specific team, and we support SME with different products. We are also strengthening our procedures to help funding ESG projects. We continue focus on the sector that form part of the Sultan diversification strategy. In investment banking, we acted as issuer banker for one of the biggest IPO in Sultanate, and also our brokerage division is a leading player in MSX. From a retail banking segment, retail banking is our fastest growing segment. Total asset grew from 845 million in 2024 to 1.14 billion by June 2026, 21.8% CAGR, and operating income grew at 17.6 CAGR to 22.9 million in H1 2026. We serve our retail premium private banking and wealth management customer through specialized team across 53 branches nationwide, including 26 branches in Islamic. We opened our first digital branch, Ahli Express, in 2022, and by end of June, we had 26 MFK operational, which is the highest in the market. And through our app-based wealth management portal, we offer our high net worth client a complete and integrated service for managing their wealth. On the next slide, we are focusing on Ahli Islamic, and our Ahli Islamic has posted a robust growth since its launch in 2013. Gross financing reached 979 million riyal by June 2026, a CAGR nearly around 29%, and operating income growth at a remarkable 39% CAGR to 13.9 million. In retail, Ahli Islamic is a leading market in a customer deposit. We were the first Islamic bank in Oman to digitally onboard the customer through mobile banking and the first to offer IPO leverage. Going forward, we continue to expand our retail business and digital branches with strong focus on a deposit mobilization. Now we will move to our financial performance for the first half of 2026. Let me start with the headline. Our net profit after tax grew by 12.3% to 25.1 million riyal, up from 22.4 in the first half of last year. On the balance sheet, comparing to December 2025, total asset grew by 7.6% at 4.5 to 4.5 billion. Net loan grew 8.6% to 3.74 billion. Customer deposit grew by 11% to 3.5 billion. A very strong half of deposit mobilization, and equity stand at 654 million. On the profit and loss, total operating income grew 9.3% to 62.6 million. Impairment charge were well contained at 7.3 million, and operating expense of 26.3 million, reflecting our continued investment in growth and digital. On the key ratio, return on average equity stand at 11.2. Return on asset is stable at 1.2%. Cost to income ratio improved to 42.1, and our MPL improved to 4.0, better than the industry average of 4.4. And our capital adequacy ratio is comfortable at 15.5%. On the next slide, our balance sheet growth versus the market. Those three charts tell a consistent story. The asset grew from 3.76 billion in 2024 to 4.5 billion by June 2026, a 13% CAGR, ahead of markets 11.9. Net loan grew from 3 billion to 3.74 billion, 15.3% CAGR versus the market of 11.5%. And customer deposit grew from 2.76 billion to 3.5 billion, 17.2% CAGR versus the market 11.3. In short, we are growing faster than the market on every balance sheet line, consistently gaining shares. On the next slide, our operating performance trend. First, the profit trend. Net profit has grown steadily from 20.1% in H1 2024 to 25.1 million this half year. Operating income has followed the same, from 50.6% to 62.6 million. Steadily predictable growth across the year. Second, income quality. Other income contribute 24% of operating income, and our net interest spread has improved from 1.7 to 2%, supported by lower funding costs while yield stable. Third, efficiency. Cost-to-income ratio, as we explained previously, improved from 43 to 42.1 against last year. And finally, the returns. Return on equity stand at 11.2. Return on asset is stable at 1.2 across all the three periods. As the marker on the slide show, we rank the third in the market on cost-to-income ratio, return on average equity, return on average asset for H1. On the next slide, our gross loan and financing grow to 3.8 billion riyals, a 10.9% CAGR, and the portfolio remain well positioned. 85.9% of exposure is in stage 1. Stage 2 has come down to 10.7%, and stage 3 stand at just 3.4%. As the sector chart shows, our lending is concentrated in a historically low-risk sector. Personal loan at 29%, services at 12%, and financial institution at 10%, which is why our MBL ratio stay consistently below the industry average. In the next slide, our funding position is a real strength. Customer deposit has grown at 13.3 CAGR, and the mix is high quality, 46% retail, 38% corporate, and 16% GRE and others. This significant increase in retail contribution means less dependency on volatile deposit. Our liquidity matrix is also comfortable. Net loan to deposit at 106.7, liquidity coverage ratio at 118.8%, and net stable funding ratio at 107.6%, all well above the requirement. And on capital, our capital adequacy ratio stands at 15.5, above regulatory requirement. The final slide highlights the external recognition we received during the year. These awards are independent validation of our progress across Islamic banking, digital banking, and SME and corporate banking. They confirm that our strategy is delivering tangible outcome, and more importantly, they strengthen our brand and support our customer acquisition, engagement, and retention. And now we will move to the Q&A session.
Now we'll open the floor for any questions, queries. Please raise your hand. Please feel free to ask any question and go ahead. If someone is trying to talk, unmute yourself.
Okay.
No, any questions? Yes, sure. Please unmute yourself and go ahead.
Yes, hi. Good afternoon, and thank you for the presentation. I just had a couple of questions regarding the bank's strategy on the recent regulatory changes issued by the central bank and FSA. What is the bank's planning, if any, on specifically on the separation of the Islamic banking from the conventional one?
Okay, thank you very much. I think what you'll hear from us is more or less same answers provided by our friends from other banks. This framework issued by the central bank is not surprising news to all of us. We've been in discussion with the central bank for a while. The central bank, in its framework, clearly gave a path for all windows to consider various options. At this point of time, we are considering all options, and we are assessing, as I said, our options. At the right time, we definitely will go to our board, and then we'll announce whatever decision is being taken. But at this point of time, it's premature and very early for us to make a specific decision or comment on the way forward. Having said that, I think we all are quite glad and happy with the progress made in the Islamic banking over the last few years. And we do believe also this framework is further strengthening the Islamic banking going forward. So we look at all of these positively. And once we're done with our internal assessments, we'll follow the standard process for any sort of disclosure in this line.
Okay, okay. Thank you. You're right. It is very similar to what the other responses we have heard. My next question is regarding the news that was circulated last year about the merger between Ali and Sohar International. And the last update we have is that obviously the merger was delayed, or is there any development, anything new on that front that then the bank would like to disclose?
No, nothing. Whatever we have said or discussed last time, there is no further discussion with any other bank at this point of time. Hello?
Yes, okay. Thank you for the answers. Thank you.
Thank you, Sean. Anyone else? Please feel free and go ahead. We'll give it another few.
1 minute at least.
1 minute additional if anyone want to ask or clarify. So with that, we can conclude the meeting, and we thank you for attending the MSX discussion session for H1 2026, and we'll be doing it again after 6 months for the year end of 2026. Thank you again for attending.
Thank you.
Thank you, Habib.